This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled higher on Friday but fell week on week after health authorities in China eased some of the country's heavy COVID-19 curbs, raising hopes for improved economic activity and demand in the world's top crude importer. Brent crude futures settled up $2.32 at $95.99 a barrel, extending a 1.1% rise from the previous session but falling 2.6% on the week. U.S. West Texas Intermediate, WTI, crude futures settled up $2.49, or 2.9%, at $88.96 a barrel, after climbing 0.8% in the previous session but down nearly 4% on the week.
Belgium, Greece, Italy and Poland on Friday threatened to block a new set of European Union steps to alleviate an acute energy crunch because they're angry that a gas price cap is not among detailed proposals, diplomats said. Persistent disagreements between the 27 EU countries raise the prospect that the bloc's energy ministers will not be able to give a final approval to the cap at a meeting on November 24 as had been expected. The four countries told a meeting of national envoys to the European Union that they wanted a comprehensive proposal on the cap from the EU's Executive European Commission before November 24, according to four diplomatic sources.
Moving on to the top news in the energy sector.
The European Central Bank is examining the use of derivatives by energy companies to make huge bets on future power and fuel prices, to see if such activity poses a wider risk to financial stability, three people familiar with the matter said. Two of the people said the inquiry was prompted by Germany's rescue of top gas importer Uniper, which like other energy firms hedged its exposures with derivatives worth tens of billions of euros, far outstripping the value of the energy it sold. The ECB's move is the first major effort in Europe to identify whether the use of derivatives by power companies poses a wider financial threat, and exposes the largely unregulated trading, which totals trillions of euros, to rare scrutiny.
Oil and gas producers Canada and Nigeria have become the latest countries to tackle the potent greenhouse gas methane with laws to rein in emissions in the fossil fuel energy sector. The announcements came as the United States on Friday said it would expand its own rules to require oil and gas drillers to find and fix leaks of methane at all of the country's well sites. Methane has more than 80 times the planet-warming potency of CO2 in its first 20 years, but breaks down faster in the atmosphere, making it a high-value target for near-term efforts to slow climate change. Next, we have the top news in metal markets. Iron ore futures surged on Friday as China eased some of its COVID-19 rules, taking bold steps a day after the nation's new top leadership body stressed the need to minimize the impact of containing outbreaks on the world's second biggest economy. Price benchmarks for steel products and other steelmaking inputs in China, the world's top steel producer, also stretched gains after authorities announced the measures. The most traded January iron ore on China's Dalian Commodity Exchange ended daytime trade 5% higher at 708 yuan and 50 fen, $99.86, a ton, after touching its highest since October 12 at 720 yuan.
Gold prices extended gains to a near three-month high on Friday and were heading for their best week in over 2.5 years. As signs of cooling U.S. inflation bolstered bets that the Federal Reserve would be less hawkish on rate hikes going forward. Spot gold gained 0.7% to $1,766.39 per ounce by 2:28 p.m. Eastern Time, 19:28 GMT, after hitting its highest since August 18 earlier in the session. Bullion is up over 5% so far this week. U.S. gold futures settled up 0.9% at $1,769.40.
We will now look at the top news in the agricultural.
European wheat futures were little changed on Friday, having hit 7-week lows hit on Thursday, underpinned by strength in U.S. futures and wider commodity markets. Dealers awaited news about negotiations on Friday between the United Nations and Russia on an extension to the agreement on a shipping corridor for Ukraine's grain exports. December milling wheat on the Paris-based Euronext unofficially closed down 0.25 euros, or 0.08%, at €327.00, $337.99, a ton. A public holiday in France meant some market participants were absent. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.